and we are actually very proud to be associated with this forum, CII CFO forum. The report has been released. I trust that all of you have a copy of it. So what we essentially plan to do in this first panel discussion is focus on what the first 15 to 18 pages of the report that you have with you, I trust, talk about, which is essentially leveraging the opportunities in Bharat. Bharat, of course, is referred to as a substitute for rural India, and I think we are all very well aware of it. To help us do that, we have a very esteemed panel with us here, they pretty much represent a wide swath of industry across the board. So let me just introduce our panelists on the dais very quickly. Mr. Anuj Mehra is Managing Director, Mahindra Rural Housing Finance Limited. Mr. Ramesh Subramanyam is Chief Financial Officer at the Tata Power Company. Thank you, sirs. Thanks very much. Mrs. Vibha Padalkar is Executive Director and Chief Financial Officer at HDFC Standard Life Insurance Company Limited. Ma'am, thank you. We have Mr. MP Vijay Kumar, Chief Financial Officer at SIFI Technologies as well. What I want to do is ask our panelists to start by telling us in each of their industries what are the kind of opportunities they see as far as Bharat is concerned, as far as going into rural markets are concerned. Mr. Mehra, if I can request you to begin, sir.
I represent the housing finance industry, and as far as we are concerned, rural India is a very large opportunity because this is one area which is totally under-penetrated as far as banking as a whole is concerned, and most certainly housing finance is part of that entire industry. We started working about 10 odd years back, and it's only in the last few years, about 5 years or so, that we've got our model together, we've got our act together, and we are reaping the benefits. We are seeing rapid growth, we are scaling up rapidly, and we feel that this particular opportunity is there for keeps, and we hope to be able to encash on it.
Mr. Subramanyam, if I can request you to answer that question. For your sector, what are the opportunities that you see when we talk about Bharat, sir?
Right. So, power is intrinsic to economic growth, and there's a very strong correlation of power consumption and economic growth. India today still lags behind because we are about 1/3 of the global average in terms of per capita power consumption. India is about 1,000 kilowatt hours per capita, which is 1/4 of what China is and probably 1/3 of the global average is. The other important thing when you talk about rural India is that we today have a situation where 27% of the households in India are still not electrified. We have about 6,000 villages which have absolutely no power consumption available, power connection available. And we are talking about 5 crore households like this, and if you assume a 4-member household, you can assume that's just 20 crore people who are today without power. I think there's a huge opportunity there, to say the least. And remember that, we travel all over the place and we still find that, power cuts are, everywhere. And in fact, only 13 states in India have really 24/7 power supply. The point is that there is a very big gap today in the rural economy, and reaching power to the vast hinterland has huge spin-off effects. And I think the way we look at is that some of the government programs are aimed at resolving that issue. How well they do it, time will tell. But there is a huge linkage between developing the so-called energy sector in the Bharat and thereby setting the whole economic growth in those areas apace. And I think that's the big theme that we see in the energy sector, and a lot is being done, but I think a lot is yet to be done.
Ma'am, if I can start by asking you, financial services, I think, again, has been doing very well. There have been initiatives by the government, things like JAM, the JAM Trinity as we know it now. What do you see as the big opportunities for the sector from Bharat?
So I wanted to laud the government for the initiatives on the JAM Trinity. For those of you who might have missed what that is. So that is all the Jan Dhan schemes coupled with Aadhaar and using mobile platforms. So it's what you sell as well as how you sell and combination. And I think this is a hat trick because for the government to come up with this scheme, also what, say I represent the insurance industry, and that is really the conundrum on how do you reach demand. We are very convinced that the demand is there. How do you reach that demand in a very low cost manner coupled with ease of onboarding, so things like Aadhaar. A couple of data points I wanted to give you. One is we as an HDFC Life used to sell about 19% of its policies in the rural segment, and this follows the definition of number of house, the per capita income, as well as the population. So used to sell about 19%. That year to date January has been 27%, and this is on the backbone of it slowly moving to it being a profitable business. Low margins, I admit, but nevertheless, wearing my CFO hat, a profitable business, I can see a line of sight. Second is the phenomenal success, at least for HDFC Life, on the PMJJBY initiative. Our company sold about 8 lakh policies. Overall, life insurance sold about 3 crore policies. This is, when you think about it, 2 lakh cover on a mobile just through an SMS through your bank. Paying 330 rupees as premium, no questions asked. Fairly decent business. Persistency, meaning how many of them renew their policy, higher paradoxically than the urban populations buying regular insurance protection policies. So early days, I admit, open to fraud, again I admit, but in terms of vision of getting a very simple protection to the needy, it could be even urban poor. So when we think of people who work in a home, say a driver, 2 lakh rupees on death of a sole breadwinner typically would have wiped out his family. That coupled with, so life insurance coupled with health insurance coupled with pension is kind of end to end without him giving it a lot of thought. Even for that segment today, 330 rupees is not a huge daunting amount. So that kind of a brainwave, I think, and I think it's early days, so we are hugely supportive of those kind of low-end schemes. So just to wrap up, I don't want to be a naysayer of saying people haven't taken up or people don't know what they're buying or it's open to fraud. I think this is the space that is very, very untapped, and I do agree with what Union Minister Mr. Tomar said of connecting the two Indias, and the India that we think is the real India, which is people sitting in this room, is really the tip of the iceberg. And unless we get to the other India and connect the dots, real development ain't going to happen.
Thanks, ma'am. Mr. Kumar, you want to come in first thoughts, sir?
I can share with you that all the expansion which is happening into Bharat or rural India as it's referred to, every enterprise, including my co-panelists which they represent, all of them are making efforts to reach 70% of India, that is the rural population, through business models which consume IT. Very limited kind of expansion is sought through brick and mortar. The effort to reach rural India is largely through IT. And at SIFI, we have seen a project like the Department of Posts, where an effort is made by the government for financial inclusion. About 30,000 post offices, which is spread across Tier 3, Tier 4 locations, where the large telecom carriers are not present, are all connected through the wireless technology of SIFI technologies. So in this context, what I'm seeing is, with all the banks trying to expand into rural India, insurance companies into rural India, and also manufacturing companies moving to rural India, I expect a lot of IT consumption to happen and the growth coming through IT consumption, which will enable companies like those which are in the IT space to be part of this journey of integrating rural India with the urban India.
I want to just ask all of you for your thoughts on what is the one biggest challenge that you face when you operate in rural markets? I mean, and I think if you focus on each of your respective industries, sectors, I think that will be enriching. If we can start with you, Mr. Subramanyam. Very brief comments.
Yeah. I think the key challenges is physical reach. Okay. Because power needs a physical reach. Unless, of course, the distributed generation, which is essentially solar-led and wind-led, can be self-sufficient. Today it is not.
Sure.
There is a way to go in terms of storage solutions, but I think that's the bigger one. The other is really the whole scheme of budget allocations towards subsidies.
Right.
How you reach, how you target the aims of providing affordability, vis-a-vis how to make the suppliers of that power financially independent. So this is a challenge, because the DISCOMs are in big losses.
Sure.
And the government's intention is to bring affordable power, but this has to be married.
Sure. Mr. Mehra?
Can I cheat and do two?
Yeah, please.
Okay. I think the first challenge is reach, but of a different kind than what Ramesh mentioned. Here, it's really being able to talk to the customer, because the last mile talking to customer, speaking with him, convincing him is very important. Right? I think the rural customer wants that hand-holding at the last minute and is not going to do everything over technology. So to that extent, I disagree a little with Vijay. Yes, IT will be leveraged. Yes, you will use it to reduce costs, improve your efficiency and effectiveness. But last minute, last mile connectivity in terms of the human hand and touch is extremely important when you're discussing and talking to the rural. And that is what the challenge is. Okay. How to go there, how to be able to talk and yet manage costs. Logistics become a nightmare. The second important thing, as far as we are concerned, and now specifically for this industry, my industry, is the state of land records. Everybody in the village knows that the piece of land belongs to me, but on official records, it would be in the name of my great-grandfather, who maybe died 50 years back. So I think that's a huge challenge which we face specifically. And if we are able to do something with land records, it is not just the housing finance industry which will gain. I'm sure a whole lot of other industries will gain, because suddenly the person who owns that bit of land is able to monetize an asset which otherwise is just useless.
Okay.
Or it's not monetized. So I think that's a big challenge.
Ma'am?
So I would see this in two parts. One that has been spoken about, so I won't spend too much time, which is how do you reach people in the rural areas? So that continues to be a challenge. But having said that, I agree that it will have to be a combination of bricks and mortar along with technology, and not only technology or not only bricks and mortar. So for example, in insurance, our regulator, IRDAI, has allowed us to have common service centers. What that means is each insurance company does not have to go and set up its branches. You can have one entity which sells a whole host of other, even non-insurance things.
So just a quick point. Is there the question was essentially challenges that you face in each of your businesses, but we haven't heard the challenge being the effective purchasing power with somebody residing in rural India. That is not an issue at all. Or would you say that is also an issue, and that needs to be somehow, when you offer your services, does it is it a challenge?
I think it is not, but caveat, purchasing power is there. You need to understand that cash flows are lumpy. So, for example, as a housing finance company, the first thing people think about is EMI, equated monthly installments, right? We don't offer EMIs. What we ask for is 6 monthly repayments, because we know that the person does not have the money to pay every month.
Sure.
He will repay you only on the basis, only once in 6 months or so, when he has a crop. So almost about 70% of our book is on 6 monthly repayment structure. So I don't think there is a challenge as far as income is concerned. If you calculate as income, it will be X amount. What you need to be awake and aware of is that income is not equally distributed as it is in the urban area. That income tends to be lumpy when it comes to cash flows.
Okay, so it's about cash flows, not really
So you need to be mindful of his cash flows, and not just go by an income level.
Okay, because at the end of the day, it's a business decision, right? Yeah. We can talk about it as a forum that, well, there is an imperative to reach into Bharat, and I think that it makes a case as well.
Yeah.
But when you sit down, make plans, it's about whether you'll be able to make a profit on that investment or not. Yeah. Sir?
So interestingly, in power, we say that costly power is better than no power, first of all, So there are people who are dying to pay for good quality, reliable 24/7 power. And if they really are desperate in many parts of the country, and especially in the rural areas. So one is that there is a portion which is really hungry. The other is affordability. Now, affordability today is an issue of efficiency. For example, the Uday scheme, as well as the integrated power development scheme. Both schemes are intended to reduce the transmission and ATC losses from today's average of about 25-26% down to the 15-20%. Now that will make the affordability automatically. If you increase the reach, you distribute the system cost, and I think CFOs understand it very clearly. The total system cost divided by many consumers would mean the per consumer system cost is less.
Sure.
And I think that is the power of spreading the reach of distribution. And if we achieve that, I think the cost element will be taken care of.
Right.
Today the issue is of reach, and then the second issue is how to separate the problem that the consumer today faces, that you want to give, government wants to give subsidy to certain areas, but the subsidy is being routed through the DISCOMs. That's not the way, because the DISCOMs need funds to improve their systems and their reliability.
Hopefully, the Uday scheme will solve that problem this time at least, right? We've had many attempts in the past as well. Hopefully
I
this time it
think
gets
still
done.
early days. We are moving in the right direction. Let me put it this way.
Right. Ma'am, if I can just ask you, would you say, I mean, again, the point about effective purchasing power, because for a lot of your businesses, urban markets are in a way saturated, right? You have to go beyond urban markets, semi-urban, rural, really the heartland of rural India. But when you decide to make investments in that, for those markets, are you sure about returns? Do you have to plan differently? Just give us some insights into those points.
So I think with every CFO in this room, we are constrained by the fact that it is difficult to write loss-making business into perpetuity. But my opening remarks, I had mentioned that that is no longer required given what the government is doing on all aspects of how to reach the rural India or Bharat. And I don't want to again mention about the jam trinity, but some of those things are enabling us to reach a smaller ticket size. So it cannot be fully bells and whistles, having a fancy office, fully loaded cost. Insurance companies or any other business will have to think differently, will have to think what is the pain point of the end customer in the rural. So one size fits all will not work. I'll give you a couple of data points. One is what I mentioned earlier, about 19% of our policies we used to sell in rural India. This year, year-to-date January has gone up to 27%, when regulations actually only required 20% now. So it has gone beyond just complying with what the regulator wants. Second point is another data point, given that a lot of MFIs, which were virtually non-existent maybe a decade ago or even 5-6 years ago, have been giving small ticket loans, say on the basis of JLG, which is a very popular thing about lending to women. Now, what happens if again the main breadwinner in a very small family, whether it is rural poor or urban poor, dies? We in HDFC Life do cover these loans, small ticket sizes, 10,000 rupees, 5,000 rupees, 20,000 rupees. Every month today, and from being 0 4 years ago, every month today we cover almost 7,50,000 policies a month of MFI sector. Now we are not writing loss-making business on that. So to answer your question, it can be a win-win provided two things. One is how do I get to the customer, and second, how do I bring down the cost of KYC.
And you need a path to profitability at some point, right?
Absolutely.
As you began by saying, it can't be perpetual losses.
Absolutely. But coupled with jam trinity, if Aadhaar is made compulsory, if BHIM becomes fully operational and connectivity issues are resolved, there's no reason why I cannot cut out an intermediary and say, you want this, you're 2 clicks away.
Okay.
And this is all you need to know. If you want a person, I can give you a differential pricing.
Okay.
So it is called assisted online.
Mr. Subramanyam, Mr. Mehra, ma'am, thank you very much. Mr. Kumar, appreciate you joining us. on the dais for this enlightening discussion. Thanks indeed, very much.